The euro against the US dollar and the British pound against the US dollar are actually not the same thing on the daily time frame. In case you've been misunderstanding the whole arrangement and the whole structure on the euro against the USD and the British pound against the USD, this video is for you. Starting with the euro against the US dollar, we're going to look at the big daily time frame structure all the way from the left here. We have the higher high to a higher low, to a higher high to a higher low. Then we had a higher high. However, after this last higher high, we had a lower low because we broke below the higher low. And that led us to a higher low, to a lower high, and now a lower low. So the market is currently at a lower low, and we're currently at a swing to the downside. Meaning everything we see in this market is most likely a retracement. Until price breaks above the lower high, we are in a retracement move to sell the market at the extreme high. On the daily time frame here, we're going to focus mostly on the current swing because that is the only thing that matters to us as the current time traders. And what we see here is the market has everything I need to actually take a trade to the long side. We have a low and a high, and then a lower low which breaks below this low, and then a higher high, thereby creating a change of character and a sweep of liquidity behind it. This is a very good situation for people to actually come into this market and buy. So if the market should come down towards the 1.14 1.10 levels, it will be a good buying area for me. But that is not all. Let's dive down a little bit deeper. On the 4 hours, as we all saw, the structure becomes the main swing structure, and on the main swing structure we have the same situation here. However, we're no longer looking at the swing structure as we already know fully well what we expect to happen at the downside around the 1.142s to 1.38s levels. What we're going to be looking at right now is at the top of the market. We want to see if we can feed this high to the downside. Looking at the situation right now, we currently have the market printing a possible scenario. So we have a high that leads to a low, that leads to a higher high. Now for me to be able to sell this market, I would want to see a lower low come through. The moment I see that lower low below this 1 hour zone, this is where I expect it to break the structure for me to short the market. Below, once we see that, every retracement into an unmitigated order block to me will be a very good sell signal on that time frame. But we can also go a little bit deeper down to the 1 hour. On the 1 hour, what we see here is we see that the market is currently mitigating a daily supply zone. This is the first supply zone where we expect a little bit of resistance. We may see or may not see that resistance. However, the market is giving us a slow grind to the downside. But a slow grind like this, one thing is usually common. At this point in time, we may see the market touch into the extreme lows of the 1 hour and then push to the upside. That is one of the most likely situations. Why do we have that situation? Well, it is simple. You notice the slow grind we had down here and then the massive push to the upside. That signifies that buyers literally are sitting in this zone. We had a drop into the zone, a grind, and then a push above. And at the same time, we had that break of structure, the sweep below, and then the move up. That is what we had in this zone right here. And that is enough for us to say there is a high tendency that this extreme low may see buying pressure when the market comes in. But I won't just buy because I expect it to have buying pressure. I'll buy if I have the same situation here. It is a zone, not a POI. So for me, I expect to see price make it a low. I expect to see price make a low, a high, a lower low, and at least a higher high, breaking the structure. That way, if I have unmitigated blocks behind the zone, it's a good buying momentum for me. So this is it for the euro against the USD. Now, how is this market really different from the British pound against the US dollar? Let's take a look at the British pound, starting from the daily time frame. So right here on the daily time frame, this is the British pound. What we do have here is a quite similar situation, but it's totally different. Why? This is it. We have a higher high right here that led to a higher low. And then we had a lower high that led to a lower low. It looked like it was a bearish trend, but then again, we saw something. We saw the push up. which led to a higher high. And this is where a lot of people tend to miss the situation. This market has not made a lower low, neither has it made a continuation of break of structure to the higher side. So we don't have a lower low, we don't have a clear lower high. None of the situation is clear here. Market is just trending within, or basically it's ranging within this one last swing leg we have in this market. So everything you see in here is literally range bound to bullish markets. Because why? The last break of structure we had was to the upside, meaning this market is more bullish than expected and also has more tendency to go to the upside. Now, looking at that in mind, we have the extreme of the swing leg, and the extreme got mitigated, and we see how price is reacting out of that extreme zone. Price is even creating a very good structure for us right here. We have a low to a high, and then the mitigation after it breaks below the low, and then it creates a new higher high, giving us a change of character. So a pullback into the extreme is expected for us to be able to buy to the upside. However, price may or may not pull back to that deep extreme, but it's preferably to wait for it to come down to the deep extreme, because this is the best money risk ratio reward stuff, risk to reward ratio for anybody. So all of this to me looks more like inducement. Even if the market runs, it's fine, I'm okay. I'm not going to chase this market, I'm not going to run after it. However, we also have the high extremes up here. This is an area where we expect, if selling is going to happen, it's going to happen up here. This is where we expect it to really occur if selling is supposed to happen. Now, with that said in mind, we already have an expectation that this low, this current extreme low, is going to be a good buying zone for us if the market should print bearish move into these areas. Moving on to the 4 hours. On the 4 hours, we're going to monitor the most recent swing leg. And what do we see as the most recent swing leg here? Well, you might say this leg looks like the most recent swing leg, which you are actually right. However, let's look at the leg, the clearest leg before this one. We have this whole swing up, pullback, and this current move we see. So in this move, we've already analyzed it on the higher time frame, knowing fully well that below the zone is where we want to be buyers. Now, above the zone, what is happening? Is it possible for us to fade the current market trend to sell the market to the downside? Well, yes and no. Yes, we want to fade it because it's currently at a sell extreme, or rather the highest point possible, which is the extreme. But then again, it's a no because we've not gotten a clear break of structure to the downside, or rather an internal break of structure to the downside, to signify that this market was most likely about to start going downwards. So currently on the 4 hours, we're quite neutral on it, neutral to bearish move. And then on the 1 hour, what do we have? The most recent structure is this move upwards. We have the break of structure here, the push up, and the pullback and continuation. Well, what would make us actually join in the selling of this market? For me personally, I would like to see a break below this 1.3477 levels. If price should break below the 1.347 levels, then it's going to be a good sell for me, especially if it leaves behind unmitigated order blocks. As you can see, the order block created here seems like it's still unmitigated. It's unmitigated for now, and if the market should leave this order block unmitigated, it's going to be real good for me to want to sell from there. But it all depends on price breaking through this 1.347 levels. So you've seen it. What really is the difference between the euro and the US dollar and the British pound and the US dollar? Well, you can see clearly for yourself. The euro USD on the lower time frame has a tendency to sell, has to break below this low, but is currently being mitigated by a not so strong or not so obvious supply area because it is seated right in the center of the daily leg. Unlike the British pound US dollar, which is also not at the extreme of the daily leg, but is currently sitting at a very obvious 4-hour extreme, making it a prime area where the 1-hour sales is most likely going to occur. Another big difference, or another key difference, which is the major key difference, is that the British pound daily structure is actually a bullish structure. It is still trending or ranging within that last bullish swing leg, unlike the Euro USD, where we have the daily structure clearly in a downtrend, as we have the last break of structure to the downside. These are the difference between the British pound and the euro against the US dollar. I hope you learned something new. If you did, do well to hit the subscribe button, like and share this video with someone who you think may find this trading knowledge valuable to their trading career. I'll see you all in the next one. Peace.